If you're a homeowner, you know what's going on. Home prices have been on the rise for a while, but with inflation comes an increase in interest rates, which will greatly reduce the increase in home prices and more than likely will reduce the value of your home over time. Another concern with those rising interest rates is what you're going to pay for your next home. So you're probably thinking, but Joe, you just said home prices will more than likely drop. So shouldn't I wait for that to happen? Well, not exactly. Let's take a look at what those rising interest rates will do to your home buying power, along with the buying power of anyone that would be potentially interested in your house when you're ready to sell. So, if you take a look here, this is what interest rates were when we had very, very, very low interest rates, 2.8%. This is something we will never see again. So if there was a $350,000 house and your property taxes were about 845 a month, that's about 10 grand a year, which is very typical for the $350,000 house. Your payment would be 2349 a month. That's what it would have been. But as you know, interest rates have risen. And again, we're never going to see this again. Nobody in our lifetime has ever seen interest rates this low, unless maybe you're over 200 years old. I mean, that's as far back as we can go to see. This is what you would have paid over time. The total cost of the loan would cost you about $517,000 if you went through the whole life of the loan. $167,000 in interest, which to some people, that's still a very sickening number. But again, this is with record low interest rates. Let's see where we're at today. 6% interest rate. Wow, we have come a long way in a year. Now, the $2,300 that you were paying if you had a 2.8% interest rate, well, $3,009 per month. So anyone that could afford the 2,300, they can't buy that $350,000 house anymore. And all you have to do is think of what buyers have in their mind. So when a buyer goes to the bank, they get a pre-approval, and they typically like to spend every dollar that the bank will allow them to spend. So if that's the case, anybody that can afford a $2,300 a month payment, according to the bank, they can't even touch your house anymore. And even the ones that are a little bit more conservative with their money and they don't want to spend that entire amount that the bank allows them to use, they also can't buy your house anymore because that's a $700 a month difference. Now look at what the total interest you paid was. $405,000 over the life of the loan. Absolutely crazy what that interest rate does to you and how that really affects your buying power compared to if prices were lower. Now, let's say the price did drop to 325,000 but the interest rate rose to 7%, which is probably where we're headed. The Feds just met. All they're doing when they meet is they are raising interest rates. So the payment went up a little bit and the price of the home went down. So if the price stays the same and the interest rates go up, you're losing even more buying power. You can't buy what you could a month ago. Same with anyone that's interested in your house. This is how much this is affecting you. And we haven't seen prices drop yet. Will they drop? Probably eventually, but it's going to take a little bit longer time than the interest rates. The interest rates, they're going up no matter what, right? So with that, I mean, you're still paying $450,000 in interest over the life of the loan. Now, let's say prices drop a little bit more drastically, but the interest rate's at 8%, which is probably going to happen. Your payment still went up, right? We had a $350,000 house with $10,000 a year in taxes. Now that house, let's say it's worth $300,000, but the interest rate's 8%. Your payment is still at $3,112. If the price never goes down, you can't even imagine how much you'd be paying, right? I mean, it's just insane right now what these interest rates are doing to buying power and why it is so important to know what you're getting yourself into. If you wait until the end of the year, next year, you just with these interest rates, you're going to be paying so much. $492,000 over the life of the loan in interest only. Well, let's say interest rate went to 10%. which is what we're hearing. We are hearing that we are going to double-digit interest rates. And the house dropped to 350,000, or from 350,000 to 300,000. This isn't at 350,000 still. This is a reduced price in $50,000. Your monthly payment is $3,500 a month. This is just stuff that you need to know if you're thinking of making a move, because the longer you wait, the more it will cost you to buy a home, guaranteed. Now, if you're buying cash, that's a completely different story, but those people are few and far between. If you're getting a mortgage, you better think long and hard whether or not you want to move now or you want to wait a long time, because otherwise, if you're hoping to moving up, it ain't going to happen. Not with these interest rates. I have a feeling there's going to be a lot of people that just aren't moving. I don't see the influx in foreclosures because we still have a fairly strong job market, right? We just don't have people that are getting laid off like we were previously. That's what happened, is people couldn't afford their mortgages anymore. Anybody that got an interest rate of 6 or less, I mean, they're going to be able to afford their interest rate. Back in the day, anyone that could fog a mirror was getting a loan, right? Not anymore. There's very stringent, things that you have to go through in order to get a mortgage, right? So everyone that has a mortgage theoretically can afford the mortgage. We're just not going to see the massive foreclosures like we did before. So that's really what brought the prices down last time. I don't see an influx in inventory sitting on the market because nobody's going to know where they can go with interest rates in the double digits. It would cost you almost $650,000 at a 10% interest rate over the life of the loan on a $300,000 home. This just gives you a little breakdown here of what I went through on the whole slideshow there. It's just kind of sickening as prices go down and interest rates go up. It really, I mean, it affects you in 6, 7, 8, 10%. But don't take my word for it. If you look online, they are saying that they believe we'll go to double-digit interest rates to curb this inflation, which is really going to hurt your ability to buy a house. Now, if you're thinking of selling, it is a great time still because prices are still very high. And if you're thinking of buying, it's still a good time as well because those interest rates are so low. So the market's still hot, which makes it a little bit difficult to find a house. What I've been doing with my buyers, though, is I've been looking at off-market houses, and I send out online and offline marketing to find what house you're looking for that's off-market, so you're not competing with all these multiple offers where you're really overpaying. We're just kind of paying more market value, sometimes a little bit less, and you've got that lower interest rate. It's just something to consider where you are able to go find a house and then sell your house. And the reason we can do this is it's very hard right now to put a home sale contingency on your purchase of your next home unless you have that off-market house. So what we can do to draw up a bunch of interest so we know that your house is going to be able to be sold when the time is right is if we're looking at houses, what we want to do is we want to put your home on the private listing network. And what that is it's still the MLS, but when I put a home in the MLS, it goes out to Zillow and Redfin and all those spots. We don't want that to happen until you're ready to sell. So if we put in the private listing network, what happens is only other real estate agents can see it and active buyers. So what's going to happen is it's going to be sent out to all these people, but we're going to say there's no showings allowed. So we're basically going to build a dam, right? And we're going to have all these people calling me saying, hey, can I go see the house that you have listed? Can I see the house you have listed? And I'm going to tell them it's not ready yet. We're still looking for a house for my buyers. Once we find that house, we've got all these people built up behind this dam. We find a house for you, put an offer in, it gets accepted. You have a home sale contingency on your house. Now, all of a sudden, we put it into hyperdrive. We open the floodgates. We put it out to Zillow. We put it out to Redfin. So not only do we have those buyers sitting behind that floodgate, now we're going to bring more buyers in as well because it's going to go out to the general public. So anybody that was thinking about buying a house and didn't really start working with an agent is now going to really get in to your house with all those other buyers that were lined up. And we're going to create a surge of buyers that come and hopefully get you multiple offers. So now you've gotten multiple offers on your house. It's going to get you at the top of the market. And we've found an off market house for you where you can buy at the market value, right? So this is something really important to consider. Look at your interest rates. If you're thinking of making a move, you really need to think about making that move really quick. If you don't, you might be sitting at that house for a while because it is going to be very hard to afford a house. I appreciate you watching. If you have any questions, let me know. Be sure to like and share this video. Share it with anyone you know that's thinking of moving. Let them know what's going to happen to their buying power with these interest rates going up. We'll talk to you soon. Bye-bye.